In this lesson, I'm going to introduce you to the cryptocurrency market. This is a very interesting market. It's way different than the other two, FX and equities. They all have their differences and their benefits and also their negatives. But the cryptocurrency market is really interesting and it is booming. It is growing every single day, every single year, and every single month. So it is a very interesting market that I think everybody should get familiar with. Whether you trade it on a regular daily basis, that's up to you. But I think everybody here should understand what the cryptocurrency market is and how it works. So with that said, this is going to be a general introduction to cryptocurrency trading. I'm going to jump on the charts in a second and show you a little bit of how the cryptocurrency market works and so on, and the volatility within it. I'll talk a little bit about that as well. But below this video in the description, there is a guide to cryptocurrency trading that I've put together, and have a read through that. The guide explains a lot of the major things that you need to understand. And if there's anything that's within the guide that you do not understand, then obviously just jump on Google, go into a search engine and just do your own research and find out a little bit more about it. But in general, cryptocurrency market is pretty fresh. I mean, it's began in roughly 2009 when Bitcoin was released. And since then, we had many different cryptocurrencies and alternate currencies such as altcoins that were released as well. And now we have hundreds of different cryptocurrencies, or crypto assets as they like to call them as well. So with that said, this is kind of it for the introduction. I'm going to jump on the charts and then I'll finish off as well a little bit at the end. But like I said, guide below, have a read through that, and let's have a look at the charts. So the one major thing that I want to mention of the cryptocurrency market is that the volatility is not as stable as with FX. When you're trading the Forex market, it's pretty consistent. The volatility throughout the day, throughout the week, throughout the month, throughout the year is pretty consistent. And the trends within Forex are also pretty consistent. With crypto is interesting because it follows the price action patterns really well. You're going to have head and shoulder patterns, you will have triangle patterns, and you will have a trending market as well. However, the volatility is not as consistent as it is with Forex, meaning that sometimes we're going to have periods where it's just slow, not doing much, and then all of a sudden volatility kicks in and it explodes. So I'm going to show you that exactly on the chart. So when we look at the chart here, this is a chart of Bitcoin. It goes all the way back to 2011. So Bitcoin was released in 2009. And then this exchange, Bitstamp, as an example, charts it all the way back to August 2011. So we're going to have a look at this one. And a lot of people, when they look at cryptocurrency, they only remember this one major rally of 2017, okay? And then you can see that here on the monthly time frame. So we have this major rally that kind of began at the end of 2016 and really started to explode in 2017, May, June, July, August, and then October, November, December, okay? What a lot of people don't know is why we exploded so hardcore in October, November, December. And this is very interesting, and it really goes back. I'm going to tell you the story behind this. It goes back to Thanksgiving in the United States of America. When Thanksgiving finished, the following day there was a massive spike in cryptocurrency purchases. And it's assumed, this is just speculation, but it's assumed that right after Thanksgiving, during Thanksgiving, there was a big discussion of what was actually happening in the cryptocurrency market, and the families, probably the younger generations, started talking about how they were investing in cryptocurrency, and there was this big massive rally, and then FOMO, fear of missing out, happened. Right after Thanksgiving, for roughly a month or so, a few weeks, we had a massive buying of cryptocurrency, specifically Bitcoin, which made this final push right here from roughly $10,000 all the way up to 20. $20,000. And that was a result of FOMO. That was a result of fear of missing out, right? People jumped in right at the top of what was already a massive bullish move throughout the entire 2017. In November, we went from $10K to $20,000 at the start of December, right? So that was just FOMO. That was fear of missing out. And there was so much of uneducated money flowing into the cryptocurrency market that all of a sudden, obviously, you get a correction. Every single time there's a massive spike in something, doesn't matter whether it's the stock market or the Forex market or cryptocurrency market, it always follows with a correction. So obviously after that massive spike, we had a correction to reject this monthly 50 EMA at the lows of January, and then we popped back up to the upside. So that is, again, kind of like this little introduction to what happened throughout 2017, because that is what a lot of people remember, and they have a lot of fear associated with it as well. Because you can imagine, people started buying in at 12,000, 15,000, 17,000, 18,000. A lot of people bought in at $20,000. And then what happened the following weeks? It reversed all the way down to 3K, right? So there was a lot of kind of euphoria throughout 2017 within the cryptocurrency market. And then throughout 2018, there was a lot of pain. So majority of the people currently at this point in time associate pain to cryptocurrency, or they associate cryptocurrency with pain. And that is just the uneducated part of the population. The ones who are truly deep into cryptocurrency, who have done their research throughout the years, and even who have done their research now, understand that cryptocurrency is here to stay, and it will stay here for a very, very long time. And potentially even in the future, I mean, I'm talking decades from now, it could potentially even replace the current fiat system, which is Forex, right? But that's decades away. And for that to happen, cryptocurrency needs to become mainstream. But as I mentioned, 2017 was not the only major spike in the market. That is the only one that people remember, right? Because that's when the masses, majority of the individuals actually started jumping into cryptocurrency, and they just got in at the wrong time. They just got in at the highs because of FOMO, fear of missing out, which was just emotional trading. That's all it was. And then we had a correction. But that's not the only time. If we look at the charts here again, and I'm going to make this daily chart larger, you can actually see that the daily chart trends pretty well, right? I mean, we have pretty good bearish trends and pretty good bullish trends. So here was that rally in 2017, right? That rally in 2017 started with really nice runs and then pullbacks, runs and pullbacks, runs and pullbacks. And then here was that massive run in November, right? With, again, really spiking here in December until it peaked in December 17th. Then the correction happened. And again, you can see pretty nice bearish trend, right? It follows clean trend lines, and price action follows support and resistance levels, as you can see here, right? So the market in general, cryptocurrency market, it has pretty price action, right? But let's go back. I'm going to zoom out on this. I'm going to show you something really interesting, because again, like I said, this is the only rally that a lot of people know about. And there was a big rally. But if we go back, if we zoom out, right, I'm going to just zoom out here and look what we have here. 2014. In 2013 and throughout 2014, mainly throughout 2013, Bitcoin went up from lows of $68 to the highs of $1,147. That's massive. That's a huge move in the market, right? That not a lot of people know about. They just remember the move of 2017, where we went from the lows of $700 to $20,000, right? Another massive move. But throughout there, we have many different moves. And here was, in 2013, just one of them. But that's not the only one. If we continue going back, and I'll zoom in a little bit, you can already see that we have a little spike over there. And throughout the beginning of 2013, we went from the lows of $15 to the highs of 250, right? And then you continue going back. And here again, right? Pretty much at the beginning of all of this, we went at the lows of $4 or $5, and we spiked right here to the highs of 16, right? So you can see that, and we continue to go higher, right, throughout 2013. But you can see that this 2017 rally was not the only major rally, but every single one of them, right? Every single time there was a major rally, there was a correction associated with it, right? A simple correction, and then another major rally, and then a correction, right? And then it just follows with, right? This was a pretty severe correction. It lasted a few years, right? So people just associate, again, 2018 with a really big kind of drawdown period, but no, we had a couple. And then here's another one, right? 2016 and 2017, which was the big one. So, like I said, cryptocurrency is really interesting, but it has these spikes, right? Which are these massive volatility pushes to the upside. And overall, you zoom out and you look at the monthly time frame, overall, we have been making highs every single year. We've been making higher lows every single year in price, right? So every single year, the currency market has been going up, right? So if you invest in 2010, 2011, 2012, 2013, 2014, 2015, 2016, 2017, if you invested at the lows every single time, you would have been in profit. It would not have been an issue. It's only when FOMO comes in and you buy at the top, that's when the issue comes in. So with that said, another thing that I want to mention in regards to the cryptocurrency market is every single one of these major spikes is associated to something. It's associated to some kind of catalyst in the cryptocurrency market. A lot of times that catalyst is a result of some kind of volatility, some kind of chaos within a localized part of the world. Could be India, could have been Greece and Cyprus, could have been Ukraine and Russia. We had various crises in those parts of the world. India demonetized their currency. Similar thing happened in Greece, where there was a currency crisis. Ukraine-Russia crisis a few years back, where again there was a lot of fear, a lot of chaos, and whenever people lose faith in their government or mainly their central banks, you will notice that there's a massive buying of cryptocurrency because money has to flow somewhere, right? So cryptocurrency has been acting as a safe haven, which is something extremely important to know. Whenever there's some kind of volatility, whenever a portion of the population, world population, loses faith in their central bank or their government, money flows out and flows into something. And that something has been cryptocurrency. In the past, it has been gold. It has been also the Japanese yen. It has also been the Swiss franc, right? Swiss franc, Japanese yen, gold are considered kind of safe haven investments. So when there's volatility in the market, money typically flows into those assets. However, over the last decade, we have seen that money has been flowing into cryptocurrency during those volatile periods. Hence, the massive spikes in cryptocurrency. So another thing to understand is obviously this market is still developing. And with that development, we have regulatory changes, technology improvements. And every single time there's some kind of a technological improvement within cryptocurrency, an update and so on, it typically again drives volatility. Same thing when there's some kind of regulatory announcements and so on, when certain countries decide to regulate cryptocurrency, or some countries even allow cryptocurrency for payments and so on. those types of positive developments will also drive traffic into cryptocurrency, right? So as cryptocurrency becomes mainstream, this is the last thing that I want to talk about. As cryptocurrency becomes more mainstream, day by day, week by week, month by month, year by year, as it develops, as the technology develops, as the regulatory structure develops, right, it becomes more mainstream. And when it becomes, like, as it becomes more mainstream, it drives more volume, more liquidity into the cryptocurrency market, and it will become more stable, right? So we should start seeing it over the next decades. Literally, this will take a while still, but over the next decades, it will become more and more stable as more people use it, right? But until then, it's a pretty good investment, right? And as you've seen over the last decade, it's just continued to go up and up and up. And 2017 was not the only rally, right? The rally happens every couple years, and then there's a correction. So it's just the same thing. It follows the same cyclical nature of a run, pullback, massive run, and a good pullback, a correction. So that is it when it comes to the cryptocurrency market. I just kind of wanted to give you a general overview of what I think about it, right? From kind of the technical point of view of why cryptocurrency moves in general at this point in time, right? And I've showed you many different kind of volatile periods of cryptocurrency within Bitcoin that we have had over the last decade. Because again, a lot of people associate it to 2017, 2018. And like I said, there's a lot of pain there because that is when the mainstream market really jumped into the cryptocurrency space, right? And then 2018, there was that correction and that pullback. And, you know, there was a lot of pain associated to it because that was an emotional trade. Those were emotional trades placed. Those were emotional investments, not at value. Those were investments at the highs already, right? And then when you invest at the highs, you could expect there's a pullback. So always remember, we want to be investing at value, right? From a long-term point of view. So that's something important to note. And just remember, there's always going to be a correction. There's always going to be a pullback. But this is a really interesting space that I've been getting myself involved over the last few years. And I will continue to expand within the cryptocurrency market because I think the cryptocurrency market in general will be expanding over the next decades. It will not stop, right? It will continue getting larger and larger and larger, and will develop in general as technology develops and so on, and it will become more mainstream. So I'm really excited about this space, and I think it could be an interesting time within our economical future. That's all I'm gonna say at this point. So I hope you enjoyed this lesson. Make sure to do more digging into the cryptocurrency space. Check out the guides below and obviously do your own research. It's also interesting if you want to get involved within the technological side of this space, getting involved within the code and how it actually is structured and how it actually works, blockchain and so on. Feel free again to do your own research. There's a lot of information on that out there. So, but from a trading point of view, I mean, you just need to know how the space moves and how it works. And I gave you a general outline over here. So that is it for this lesson. Hope you enjoyed it, and I will see you in the next one. Take care.